The economics of owning a legal cannabis farm. The gold rush that's quietly destroying its own market. Bob is 38. He manages operations at a mid-sized agricultural supply company in Michigan. $52,000 a year before tax. He's watched legal cannabis become a reality in his state. He's watched people around him start farms. He's watched some of them make money. He's watched others quietly disappear. He decides to understand the business completely before he touches it. The license. In most legal states, the application fee for a small cultivation license runs between $1,000 and $3,000. Ohio charges $2,000 to apply, $18,000 for the initial license, $20,000 per year to renew. Nevada runs $5,000 for the application, $30,000 for the recreational grow license, $10,000 per year after that. California starts as low as $135 for a small outdoor application with a base annual license fee under $10,000. Every state is different. Every fee schedule is public. Bob reads all of them. The license is manageable. What comes after is not. The build. An indoor grow at 2,500 square feet runs $250 to $450 per square foot. That is between $625,000 and $1,125,000 before a single seed goes in the ground. Specialized HVAC holding humidity within 2%. LED lighting at 12 to 18 watts per square foot. Carbon filtration controlling odor to the property line. Backup power. Security cameras covering every square inch of the facility, recording continuously, stored for 30 days, required by law in every legal state. A seed-to-sale tracking system integrated with the state's platform, updated in real time for every plant, every harvest, every gram that moves. Outdoor is cheaper. A licensed outdoor acre, 43,000 square feet of canopy, runs $150,000 to $300,000. Perimeter fencing at state-required height, irrigation, camera coverage of the entire grow area, a secured storage structure, all compliance systems in place before the first plant goes in. Bob finds a viable path at around $200,000 total for a small outdoor farm in Michigan. He starts talking to banks. This is where the first wall appears. The banking problem. Cannabis is still Schedule 1 under federal law. Banks with federal insurance, almost all of them, cannot legally service cannabis businesses without risking their federal charter. Bob cannot get a standard business loan for a cannabis farm, not with his house as collateral, not with 5 years of tax returns, not even in a state where his operation would be entirely legal. 3 options exist: cannabis-specific credit unions in his state at higher fees and tighter restrictions, private investors who price the federal risk into their equity terms, or self-funding. Bob self-funds, $112,000 in savings, a personal loan for the rest. He gets to the starting line. The compliance machine. Every state that has legalized cannabis operates a seed-to-sale tracking system. Michigan uses Metric, New York uses BioTrack, integrated with the Office of Cannabis Management platform, and mandatory since January 2025. California runs its own Department of Cannabis Control system. Every plant gets a physical RFID tag within a legally defined number of days of being planted. Every tag is scanned into the state system. Every harvest is recorded by the gram. Every transfer to a processor or dispensary requires a state manifest confirmed by both parties within a defined window. If a plant dies, that death is recorded. If a batch is destroyed due to contamination, the destruction is witnessed, documented, and entered with photographic evidence. Bob's records and the state's records must match, not approximately, exactly. In May 2025, New York's OCM issued updated analyte limit and terpene thresholds. Operators who didn't adjust their testing protocols that month were out of compliance without knowing it. Bob hires a compliance manager part-time, 4 hours per week minimum, more during harvest. $1,600 per month for someone whose only job is making sure the paperwork matches the plants. What an inspection actually looks like. Inspectors arrive unannounced. In California, every licensed facility receives a minimum of 2 unannounced visits per year. In Montana, the Cannabis and Alcohol Regulation Division conducts at least 1 per year, with additional visits triggered by complaints or random sweeps. In New York, OCM inspectors can walk in at any time during operating hours. The inspection takes 2 to 4 hours. The inspector walks every room. They verify that plant counts in the grow match Metric or BioTrack to the individual plant. They check that every camera is operational and recording. They review the visitor's log. They check every employee badge and verify that each worker completed OCM-approved training within 30 days of being hired. They inspect storage. They audit packaging inventory. They review financial records. 1 camera offline, a violation. One missing plant tag, a violation. One employee whose training documentation isn't immediately available, a violation. A failed inspection opens a corrective action window, 10 days to respond with a correction plan. A follow-up inspection within 10 days of the response. If the correction isn't verified, the license doesn't move forward. For serious violations, products sold without a valid certificate of analysis, security gaps allowing unsupervised access to product, records that don't reconcile with state tracking data, the result is suspension. Not after a lengthy process, immediately. Bob learns this early. The inspection isn't the threat. Running a loose operation is. The cost of production. Bob's outdoor farm produces 400 to 600 pounds of dried flower per acre per harvest, one harvest per year in Michigan. His cost per pound of outdoor flower, $350 to $550. This covers his amortized build cost, annual license fees, compliance manager, labor, state-approved child-resistant packaging, pesticide and fertilizer inputs, and laboratory testing. Every batch must be tested by a licensed third-party laboratory before it leaves the farm. Heavy metals, pesticides, potency, microbials, terpene profiles, $400 to $800 per batch. If a batch fails, too much residual pesticide, microbial contamination above state limits, the entire batch is destroyed. Witnessed, documented, no revenue, testing cost not recovered. Total cost per pound to produce legal, tested, compliant outdoor flower, around $450 at scale. The U.S. Cannabis Spot Index opened 2025 at $888 per pound nationally, a 4.8% weekly decline. In Michigan specifically, wholesale prices for outdoor flower have compressed to between $300 and $500 per pound. At $400 wholesale and $450 in production costs, Bob loses $50 on every pound he sells before paying himself anything. Why the market is destroying itself. Oregon is the story the industry discusses in private. Oregon issued cultivation licenses faster than any other state. By the time the market caught up, there were an estimated 3 million pounds of unsold cannabis sitting in storage facilities across the state. Wholesale prices fell from $3,000 per pound at the peak to as low as $100 per pound for outdoor flower. The state implemented moratoriums, license buybacks. The damage to small operator economics was permanent for most of them. The problem has no clean solution. Every state operates independently. A licensed Oregon farmer cannot legally sell to a Michigan consumer, no matter how much surplus exists on one side and demand on the other. Interstate commerce in cannabis is federally illegal. Oversupply in one state cannot be absorbed by a neighboring one. Every market is a sealed container. Total U.S. cannabis revenues fell in 2025 for the first time since legal markets began, down from $30 billion to between $28.6 and $29.6 billion. Whitney Economics and First Citizens Bank published this in the 2026 State of the U.S. Cannabis Industry Report. The cause? Oversupply driving price compression, margin collapse, and growth in unregulated activity. The legal market isn't losing to illegal producers on quality, it's losing on price. An unlicensed grower carries none of Bob's compliance costs, testing fees, tracking infrastructure, license renewals, child-resistant packaging requirements, or state excise taxes. Their cost to produce is a fraction of his. They sell at prices that make his legal operation economically impossible. California documents this in its own government data. 11.4 million pounds of cannabis are produced illegally in California every year. Licensed producers generated 1.4 million pounds in 2024. The illegal market is 8 times the size of the legal one in the state that was supposed to be the global model. The tax structure? Federal Tax Code Section 280E prohibits cannabis businesses from deducting ordinary business expenses. Cannabis is still federally controlled. A restaurant deducts rent, payroll, utilities, and marketing. A cannabis farm cannot deduct any of these against federal income, even though it operates entirely legally under state law. A cannabis operator with $1 million in gross revenue and $700,000 in actual operating expenses does not pay taxes on $300,000 in profit. It pays federal taxes on a figure that cannot subtract most of those $700,000. Effective tax rates for cannabis retailers and integrated operators in mature markets? 70 to 80% of gross revenue, not income, revenue. In some documented cases, 98% when 280E combines with state excise taxes. California's cannabis excise tax increased from 15 to 19% in July 2025 before being rolled back to 15% in October. Even at the lower rate, the combined burden leaves most small farms with negative net income after taxes on a compressed wholesale market, paying taxes on money that wasn't made, on a product that costs more to produce legally than it sells for wholesale. This is the documented economic reality of legal cannabis in mature markets in 2026, where the math still works. Not every state is Oregon. Limited license states are the exception. New Jersey, Connecticut, Illinois, states where the government caps the number of cultivation licenses, intentionally restricting supply to match demand. In New Jersey, wholesale prices still exceed $2,000 per pound. The license fees are higher. Cultivator annual fees run $30,000 to $200,000 depending on canopy size. But the economics function because the state controls how many farms it allows. The farmer in New Jersey is not competing with 3,000 other New Jersey farms. The state has not issued 3,000 licenses. The second window, vertical integration. The operators surviving in Michigan, Colorado, and Oregon are not farming for wholesale. They grow, process into concentrates, edibles, and pre-rolls, and sell through their own licensed dispensary. A pound of wholesale outdoor flower at $400 becomes $1,200 to $2,000 of retail product at the dispensary counter. The operator who owns the entire chain from seed to sale captures that entire spread instead of selling at a loss to someone else who captures it. Vertically integrated operations in competitive states require $1.5 to $3 million to build and license. The path exists. It is not accessible to the independent farmer entering the market in 2026 with $200,000 and no prior cannabis license. What Bob does. Bob does not open the outdoor farm. He has spent 4 months understanding the economics completely. He sees an industry that is technically legal, technically functioning, and economically broken for most of the people inside it in mature markets. He watches Nebraska. Voters approved medical cannabis in 2024 with a 71% margin, the largest approval for any cannabis initiative in U.S. history. The state is building its regulatory infrastructure. No licenses have been issued yet. The first operators who navigate the application correctly will enter a market with zero oversupply, no price compression, and wholesale prices that will look like New Jersey rather than Oregon for the first several years. Bob files a tracking alert on Nebraska's cannabis regulatory calendar. He keeps his capital intact. He reads every update from the state's new agency. He waits for the application window. He is not impatient. He understands what gold rushes actually look like from the inside now. The people who lost were the ones who ran toward the crowd. The people who built real wealth were the ones who understood where the crowd was going before it arrived and positioned themselves at the destination first. The legal cannabis industry is one of the most documented, regulated, and publicly reported industries in American history. Every license is public record. Every wholesale price index is published weekly. Every failed operator's story is in court documents. The information was never hidden. Most people just didn't read it before they spent everything they had to get inside.